Hi everyone, welcome to the second session of the second paper, Management Accounting. So as we completed thus far up to point 2.5, this section was all about strategic and strategic planning, long term as well as short term, as you can see in the map here. We also covered last time the key difference between the data and information, the qualities of information, right? So can we quickly revise some of the qualities of the good information? Completeness, accuracy, relevance, timeliness, right? Usefulness, relevance. So these are some of the key attributes of any qualitative information that we have. And some of these are contextual. When we say something relevant, it depends on the context. So a good provision of the information should look from various angles, take care of who is the audience, when you are communicating, are you communicating too late or on time, are you providing all the required informations or not. So when you consider all these aspects, consider the medium, the chain, the communication flow, the examples, the details, who are you talking to, how you are talking to, when you are talking to, how much detail you are providing. All this information, when you consider, you are providing information in an appropriate manner. So this is the way to understand the quality of information. You don't need to memorize. Once you understand, take one example, like you are preparing a financial statement, and what your end user, maybe the banker or the investors, would like to see, how that should be prepared. So if you start to think from the shoes of others, so many things will automatically flow to you. You don't have to remember all these different acronyms and the long list of the requirement for quality of data or information. So develop those kind of thinking process, which will be helpful to understand the subject matter, and it will give less burden on the head. So if we don't have any other question, we can proceed with the session for any question. Okay. So
oh shit, my mic is on.
Earlier we have talked about in 2.5 that there is a long-term and short-term planning in any organization. Next step is the control, and finally the third step in organizational activity to plan the objective and implement the objective. The third step is really the decision making. Okay. So Vishal, you have any question?
No, sir, sorry, it was a mistake.
Okay. So the next step is 2.6, which is control, and then finally next third step is decision making. We'll talk about the decision after this. So control is of two types. The one which is driven by the overall objective, and once the long-term and short-term plan is made, organization look at whether the entire company and the team is sticking to those plans, short-term and long-term. Are we following the plan, or is it going tangent? Do we need to really tweak the plan somewhere? Maybe the short-term or long-term plan was not considering all the different aspects, market related information, so that often requires retweaking, fine tuning actually. So that is required as a assessment for performance of the organization. Is organization performing as per the plan? Second is the corporate plan, which means is organization aware of the market, the competitors, and government rules and regulations, and acting as per that. Because we have seen often that one organization probably may launch the vaccine, which may not be consistent with the requirement of regulators. Often there are some companies or startup which tries to fill the gap of the market, but it goes against the regulation, or the future regulations might make that business illegal. Some 1.5 years ago, I saw a news with regard to 1mg.com. This is like a online portal to deliver the medicines. So the new rule came, and it had put stringent control on how these medicines can be delivered, because often people can misuse the prescription, they can reorder, or they can go for the medicines which are not healthy for a long period of time, but people can still order online. So normally the controls are very loose when online orders are done for the medicines. So new rules were imposed, which impacted online medicine delivery portals such as 1mg.com. So in such situation, organization need to just revise or fine tune their strategy and continue to check whether they are still following or not. So that is control. Okay, so effective control is therefore not practical without planning, because if you don't have your baseline defined, if you don't have your map, then you can't know which road you are going to and which turn you missed. So you need to have one planning to start with, and then on the way you can tweak the plan if you find out some new information. Hence, many people think that, okay, you can't plan the future, it is too dynamic, it's too volatile. Yeah, we are in a volatile world, we are in a VUCA world. In fact, it's a very popular terminology nowadays. VUCA, VUCA. V for volatile, U for uncertain, C for complex, and A for ambiguous. So all four are kind of a hallmark of today's business. These are the kind of symptom of modern world. So we are in VUCA world, but still we need to plan long term and short term both. Only then we can tweak on the way. Otherwise, we can't start without a plan. So planning is required, and the planning will only support the control. So next step is the decision making. Okay, so that's the third step, because we started with long-term and short-term strategic plan. If you see here, long-term strategic plan, short-term strategic plan, and then we end up with the decision making. The control is the second step, and finally we need to do decision making. That actually requires again two-step process. When the decision making comes, we need to come to planning and control again. Are we good so far? Because we need to understand how they are all aligned together as a small pieces of the puzzle. Okay, so decision making process start with again planning. The first step is to identify goal, objective, or the problem. Many organizations say that, okay, we need to define the mission statement. Just like Intel says that, okay, we need to provide the latest state of the art technology to the every consumer, in the business and social world. So they want to reach out in a most effective manner with the high quality, least expensive product to every person. So if you want to have such a goal, or the Google, what is the mission statement of Google? We search every day. They want to kind of provide a global platform for the entire knowledge of the world, where people can find out anything and everything. So that's Google's mission. Okay, so mission actually helps companies find the objective. Once you find the objective, you need to break down in small pieces how to achieve that. So you might have 5 different milestone sub objectives. For each milestone, now you have completed step 1 with objective and milestone. Now step 2 is, so you have to achieve 5 steps to achieve your ultimate goal. But how do you achieve that? If today we want to start something like Google, can we do that? the first question will be resource and where to get the manpower, the capital, etc. So we need to find out the alternatives. What are the solutions? There could be many alternatives to do the same thing, right? So when we try to find out the opportunities, the solutions, the alternative, that is step 2. Weigh all of them, which one is best to pursue. So it's just like this. You want to go somewhere, a particular mall, and you understand that you need to go from A to B, but there could be 3 different routes. And then you search on the Google that 2 of them are kind of, one is blocked and another one is having high traffic. So you need to pursue the third one. Same thing goes in the business world. You need to have the capital, and some capitals are more expensive than others. You need to find out the best way to raise the capital. In order to even assess which step or which alternative is the best, you often need to collect the historical data and do the survey. Many companies hire the consultants and the companies in order to find the market related information, the historical pattern, right? We are in the world of the data science. That's why the data are important. It helps you find out the insight for a much longer time than the company existed. We might not have the data, but we can even buy those data. So we can analyze the relevant data and find out the alternative. Once we have the alternative decided with the help of key insights, then we can decide what needs to be done and planning is done. Once decision is made, you implement it. So that's why the implementation, the step 5 is outside the planning, but also before the control, because there's no need to control when you're implementing something. Once you implement the decision and that needs to be executed, then the controls come in the picture. We know the variance and tangency, something goes beyond the plan, and you need to have the regular meetings, the huddle, the update on the PPT in the head office. All these things are part of the control. Obtain the data about actual results. Are you on the trajectory, or you have gone beyond that? And it is just like any physical object as well. Just like the rocket is launched, generally the trajectory is decided, how and which path it needs to follow. If it start to follow a different route, there are changes to be made from the control room, the control center on the earth, and it will guide how the rocket or the satellite has to follow the path. So this is step 6. And then compare the actual result with the expected outcome at a regular interval, so that we can take a final decision what needs to be done. Again, at this stage also, we might need to do the tweaking. So I'll show you a typical tool, generally, which is used in large organizations or any project, how the decisions are made, milestones are set, and then timeline is also attached. Because every milestone, of course, we need to have the alternative resources and the final resources decided, but for every milestone, there should be a ETA, expected turnaround, the deadline, and then that is monitored for the purpose of control. So let's have a look how it looks like. Do you see a screen? Rather colorful.
Yes, sir.
Excellent. What can you make out from this? So here we have 4 steps to achieve the plan: analysis, design, development, and testing. Okay. Then you can see there are some sub-objective as well, or some subsections of the milestone for each step. Then you'll have January 9, next week January 16, 23, 30th, etc. So there's a weekly plan. Who is going to do what? Design phase that needs to continue from January 9 to January 30. Okay, who is working on that? Jennifer Jones. People have completed 100% for software design, the interface design. When the create design specification starts, it only starts by January 23rd. Because before that, interface design and software design needs to complete, right? So you see here steps. So for one large strategy, we have broken down different objective and milestones. So under each objective or milestone, there are sub milestones as well. So every task is broken down in subtasks. Then we identify the time period. We also identify the sequence. We give a name to the people who is responsible. What should be the time duration for which it should, by which it should complete. Everything is kind of developed in detail, so that in the weekly meeting you can find out who is doing what, where is the lag, when the action is required, when more sponsorship or support is needed. You are in complete control. This is one of the way just to showcase how granular details are used in any planning, in any tracking mechanism. So break down everything and then arrange in the milestone, provide a deadline, give a name to the person who is responsible, and then define the sequence A, B, C, D, E, and then check where we are lagging. This is an efficient way of doing the planning and control. All right, any question before I leave this page?
Bhaiya, please explain it again.
Right. So we see if we have to do one software implementation. Okay. Generally, it starts with analysis. If we need to make a platform which is enabled with blockchain or machine learning, etc., how it starts? We need to analyze.
Is it an example of decision making?
No, it is not example of only decision making. It is actually decision making and control as well.
Okay, both.
Right? Because see here, imagine. Okay, I'll go in the sequence. Okay, so first you are doing a planning. So what did you do? You complete the first column. Analysis, right? What is needed?
Yes.
Design, how you need to make the technology and platform. Development, who will be the programmer and who will be contributing to the development of this. And finally, the testing. If you need to have all these four steps, you also need to decide that you need to complete it by certain deadline, because we have to launch in the market before the competitors launch. So you need to decide the end date and then need to start backward planning, right? When you are doing the backward planning, you need to have 4 key steps completed. So we have the 4 steps here now: analysis, design, development, and testing. Under those 4 steps, you also have another 4 or 5 steps, because you can't just complete the analysis as one header. You need to have for the steps. So you have defined those. Under those steps, you need to also put a deadline. Otherwise, the analysis team will continue to work on that forever. Same happens with the design team. Design team needs the entire analysis done by, say, 10th of January. If the analysis team has not completed, then design team will say that we are going to delay as well. Then the launch will not happen on the time, right? So what you need to do as the operation manager or maybe the technology director, right? So it is not only decision making, but also the control. You need to build the control here, that the analysis team manager will have to report every day what percentage of the work is completed. If it's not going as per the plan, you need to probably help the analysis team or provide more resources, or maybe you need to find out some other ways, right? Maybe analysis and design can work simultaneously together. So this kind of revisiting is required. It's not always that, okay, you make a plan on Excel like this and it will work, right? It may not. There could be a new situation that might not have been factored. That's why all the management team, the programmer, various project team needs to sit together on frequent basis and see, are we making a progress as per the plan or not? It's just like, the army head office, the brigadier gives the command that go and sit on the particular place on the mountain, but there when you go, the situation is completely different. You need more reinforcement, more force, you need more supplies, or you might need a helicopter, right? So those, not everything can be predicted, and that's where we need to revisit the plan, look at the details, and check what else should be done. Does that make sense?
Yes. So why is this? It's just like if you see the design, there are 5 subheadings. Okay, design, database, software design, interface design. But the time limit, you can see this only 4 time limits.
Mm-hmm.
So as you see, there are 5 sub designs, but in
Okay.
the drawing you can see only 4.
No,
Why?
this one is a completion, design complete. So this is a deadline.
Okay.
This does not require a period. It is like end date. So just like, so when you say exam results come out, it does not require a period. It is just one single date.
Okay.
So this is how this is called Gantt chart, and one of the most prominent tool used in the large organizations to do such decision making, control, etc. Okay. Of course, there won't be any specific question on preparing the Gantt chart or something like this, but it will help you to remember how this thing should be done, right? So now you understand planning and control, both are done this way. Next, Anthony's view of management activity. This one we have discussed in the last session. Do you remember? Strategic.
Yes, Anthony's triangle.
Yeah, the triangle, strategy, tactical, and operational level. Okay, so we'll talk about that a little bit more today, but from a different angle and in more details. So generally, there is a triangle. We don't have it here, but that's how it works. So the top is strategy, in between is tactical, and finally the operational control. So tactical and management control. Basically, strategic planning is all about devising the strategy and how it looks like. It is a very high level, but it's still very specific. Any strategic planning or any goal basically should meet a criteria of goal setting. That's called SMART. Okay. Do you know what is SMART? So though it is used for objective making, etc., but simply it is applicable for any sort of planning. So SMART goal is specific, measurable, achievable, relevant, and time bound. Okay. So that's how the strategic planning is done. Do you want me to write it down?
Yes,
No, that's fine.
Okay. So some people will just find it useful. So let me just, so any goal or strategic plan, your own objective for your life, everything of this nature should follow this SMART: specific, measurable, and achievable, relevant, time bound, or time frame. So S for specific, M for measurable, A for achievable, R for relevant, T for time bound. Why it is necessary? Any strategy or any mission need to have this. One of the famous strategy, the mission statement which is quoted is in the books still by John F. Kennedy. So at the start of 1962, I believe, in the era of the Cold War with Russia, generally countries go into the Cold War one by another, one after another one. So when US was in a Cold War with Russia, and all these major countries, superpowers, were trying to reach space or the moon. So there was a famous speech by John F. Kennedy saying that we, as the American, we need to put a man on the moon by end of this decade. Focus on all this statement and the key words. We need to put a man on the moon. Of course, the man means person in that context. By end of this decade, and then he prescribed the complete details as if he is a rocket scientist himself. And the reason was that he was reflecting that how it should be done, and he is aware of the challenges and the granularity. So he said that it should take off from the land, from the American soil, should go up with the escape velocity, should follow the trajectory and all the way across, escaping the gravitational forces. It should go on the surface of moon and put somebody there, and with the given time frame, it should also safely bring the person back from all the way through, following a prescribed path, and safely land back on the American soil. So he defined every step or the high level plan, how it should be done and how it would be done by when, by end of the decade, right? So goal was specific. Was that measurable? Yes, because the time was given, and kind of very high level route and the procedure was defined. The end planet was defined. Was that achievable? Yes, because many countries were trying to do that, and the space technology was available. It was just a matter of organizing it properly. Was that relevant? Yes, because in the space war, if you want to win, it is required to prove the supremacy of the country. And time bound? Yes, by end of the decade 1970. And that's how America was able to successfully put a person on moon. Okay, so this is the way the goals and mission statements are set and communicated, basically. That helps everyone to stay aligned. Coming back to the textbook. So once we have that, we need to also understand what are the tactical or management level repercussions for this. Tactical is what? Below the strategy. So in that context, if you go, then the below the president of United States, or president or prime minister of India, basically you need to look into the secretary level or ministerial level, people, how they have the plan to do this. Do we have the resource? Do we have the budget, the capital, the technology, or the license or permissions, the collaboration all over the world? Do we have those strategic inputs to make it happen, right? In the company and the organizations, what are those resources? It's called typically 4M, right? 4M, easy way to visualize that is, whenever you have to achieve something, there are input, right? And what is input? Material are the input. So 4M start with material, then machine and main process that, right? Just like you put the data into the computer and computer CPU process that. So machine and main, they are the one who process something, right? Then you get the product, and product earns the money. So resources are considered with the 4 key elements: main, material, machine, and money. Okay, so just visualize that you put the input as a material, main and machine process this, and money is earned at the end. So they all contribute to the resource for any organization. It's just a way to remember all the 4 M's. Okay. So for any organization that we have also discussed in the past, in the previous sessions, in other subjects, that efficiency and effectiveness, you will hear it so often, because in any strategic and planning discussion, these words comes. So for tactical management, we also need to always focus on efficiency and effectiveness, because the strategy cannot be implemented appropriately if either you are just wasting money, you are not efficient, or you are not wasting money but you are going into a different direction. So if the president of the country said that to go to moon and somebody start planning to go into Mars, what is that? It is ineffectiveness. Effectiveness means going to the right place. So if you start going to some other planet, it is not effective. Or if you waste money too much while still going to the moon, that is not efficient. So effectiveness, efficiency, and resource, all three needs to be thought through or should be considered before the tactical plan is finalized. Tactical plan is kind of also considered like management control. Management has to decide resource, efficiency, planning, right? And then they will hand over this plan to operational team, operational control, because the management team is and tactical team is looking upward at what the strategy team is telling to me, and they will try to implement the strategic team's mandate or their objective. And once they will make a plan how to do this, how to get the resource for that, then they will tell their operational team how to achieve this, just like in a sales function, how it works, right? The Pepsi team, strategic team, head of India or the head of United States will say that, okay, we need to sell every month 500 million, or maybe a smaller number, maybe every month we need to sell 2 billion bottles of Pepsi in India. That is a strategic objective. Then middle management will say, oh, it's a very big number. How do we do this? So we need to get more logistic, more stores in line. And in order to win those stores, we need to have the agreement and contract with them. We need more financing. So they will talk to the bank and will raise more finance. Then they will tell their operational team that, okay, start aggressive marketing, make more creative ads, and go door to door to provide the samples, and incentivize people to drink more Pepsi. Make some attractive plan. Try to attach the drinking of Pepsi to some social cause, because every bottle that you drink, we are going to give 1 rupee to the nearby school, something like this. So that will be kind of a very operational plan, how each salesperson should be focusing on their own sales target. So that will become the operational plan, how to implement that on day-to-day basis on the ground level. Okay, so that is operational. In between is the tactical, when you get the resource, and the top is strategic, when you make a long-term plan to increase your sales target or market share, basically. So all this is done through various technology and the tools and the process. One of that is management control system. Management control system, decision support system, these are all interchangeable words, actually. They provide you the required data of the performance of activity, which unit is doing what, every country or every state achieving their goals, sales target, what is their limitations, where they need support, when they are overachieving their target. So if you think that most of the teams are overachieving the target already, which was set, then you need to maybe reset the target, sales target for next month. All these details are closely monitored. And thanks to the new advanced technology, this can be done much easily now. And the systems can also find out the patterns and can give the suggestion as well. That's the best thing. Even something that cannot strike to mind of management, the systems can also support decisioning. You'd have seen, so nowadays, if you buy one book or one cloth, Amazon will suggest those who bought this shirt also bought this one, or those who bought this mobile also checked these gadgets. What is this? It's a data-based, data-driven artificial intelligence. They will try to analyze a pattern and suggest you what needs to be done. Many times, if your birthday is coming and you like extra large red t-shirt, you might have forgotten to order, or might be your relatives forgot to order. But often in many countries, it has been found that Amazon will send it to you. And they know that you are likely to buy this. And if you don't like, you can still return it. But they will send it to you without anybody ordering. It will arrive to you one day before the birthday, and you think, oh, who has sent it? It was just sent automatically by Amazon softwares. And ultimately you think, yeah, I think it was a good decision by the software. And they are offering 50% discount as well, so you just make the payment as well. See, they know you very well. System can know the process, the thinking style, and the business requirement, right? So a great time to manage business. So the basic elements of management control system or any such decision support system, we can traditionally think: planning, recording, carrying out the plan. So what is the carrying out the plan? Even a system can gather the right data entered by the salespeople and can highlight who is missing the target. It can also compare the two data, your this month's performance versus last month's performance. It's like a typical management accounting tools and softwares, right? So if you can compare, you can evaluate the comparison and decide whether further action is necessary. All these things can done on a simple Excel as well. The Gantt chart that we have seen, there are Excel, some advanced Excel programming tools are there. If you use Visual Basic and macros, they can do all these basic things. We don't even need Python, R, or such coding language for artificial intelligence or data science. These things, planning, recording, carrying out, comparing, evaluating, corrective actions, those can also be done in simple Excel using some cool Visual Basic programming tools. So basically what it is trying to do: gather the data, do the pattern analysis, do the comparison, and then flag. It's something called a RAG rating. So red, amber, green. If your performance is quite low and you are unlikely to meet your target, it will become red. But your performance is not quite as it should be, you might miss the target, then it becomes amber. If everything is good, it is green. All those things can be set up in the system. It can evaluate the performance, it can compare, and looking at this, you as the manager can take the corrective action. So these are the basic element of management control systems. Are we good so far? Any question? So,
No, sir.
excellent. So next we are going to talk about what are the key information required at by people at different level. Sorry. So strategic level people need a different type of information, as you can expect, as compared to tactical level managers and operational level. Strategic level people need data about how other geographies are doing, how my competitors are doing, what is the market size, what is the change of pattern, what is the change in consumption by people, right? After the pandemic, are people still going to buy that much of clothes, or did they learn a lesson that consumerism is not such a cool thing? People can survive without buying so much of the shoes or the clothes. Might be people are thinking that shopping too much is so much is not required. People are not going to outside or malls as much, so they need to attract people online more. So this kind of key insightful decisions or discussions are required by management. Hence they need a very high level information. It's called bird's eye view. So they want to get the data which can provide them a bird eye view, like 30,000 feet. If you are flying at 30,000 feet, what kind of information you need? You want to just get high level idea about how the different companies are doing, other countries are doing, what is the different geographical distribution of the product, which area and zone is wealthy, which one is not, where the particular product can be sold. So that is a strategic information that is required by the senior leaders of the organization. Tactical information, when the goal has been set, then the tactical managers, middle management basically, they need a different sort of information, such as like what is the logistic, who are the different vendors who can support, how much budget that we have, can we get more loans from the bank, you know, do we have the resource and the capacity and the skill set. These data are required by tactical operation managers, so those who are between the strategy team and operational team. Now finally, those who are the bottom level, the ground level staff, they need a more granular data, more detailed information. For example, if they are in the payroll, they need to know how much daily rate of daily hourly rate is required for labor. What is the hourly dollar or rupees charges by labor? How much other companies are paying? What is the total labor supply? You know, or if they want to hire new salespeople, they need to see, are people available in the market with the required skill set, or they need to should they hire, or they should just contract out. So all these details are at the operational level. Of course, they can go door to door. They will try to do the sale. They will do the analytics entry into the database or in the Excel sheet. If you consider in a BP or KPO environment, they will do the data entry. There are people at the call center. They are interacting with the customer and the client directly, and they want to know, where more and more clients are based. What is there any database of the client that they can use and give a cold call to buy their products? So these data are required by operational staff. So you can see different level, different type of requirement of data. Everyone has a different hunger, different type of data needs. You can't feed the lions the grass, right? So similarly, people at different level have different information requirement. Next discussion is on financial accounts and management account, what they are and what are the differences between the two. So before we go into the column wise analysis, line by line, and try to memorize, it's better that we first try to understand how these informations are used by management, what informations are covered in management account versus financial accounts. Okay, let's take one scenario whereby there is a large manufacturing company and they have gone to a bank for loan. Bank staff asked for the audited financial statement from the manufacturing company, because that's a limited liability company, so they will have the annual financial statement. So what they can do, they can ask the financial statement from the company, and they can also download it from the company registration office or even the various database for the listed companies, because the company is also listed, right? So normally the financial accounts, as you can see, are filed with the regulators, the company registration office, that is audited on annual basis, right? 2-3 things that we learned from this discussion now, that there is always an audited financial statement for a limited company. Why? Because limited company is limited by its liability or the investment. The directors of or the investors of the limited company cannot be sued if the company goes bankrupt. Hence, they need to follow the tighter control and discipline and the rules regulations by the regulators. So they have to get the financial statement prepared every year with the disclosure notes, get it audited and file it with the regulators and the company registration office. So a bank which is planning to invest, they can ask for the financial statement or they can pull it from the regulator's website. Okay, so we know the rules and controls, audit requirement. Now what goes into this? That will talk about the money financial statements. Money, revenue, income, return, assets, liability, future plan, and the strategy of the company, where they are going to invest money. What was their return? What was their earning last year? all the money, revenue, income, profitability, earning per share. So financial statement will talk about all the financial aspect. And why everyone else need it? Because many people can be investor or maybe interested party. There could also be a supplier. They might have asked for this. There could be some client and consumer. There could be bank. There could be regulators. There could be court, which can ask all this information, because it is mandatory to prepare every year and accurately, right? So we can see the financial statement is prepared for the entire last year or even more than one year. So with that, we can understand what is written here. Financial accounts. Financial account details the performance of organization. We have understood, required by law, right? Format is published. Financial account is determined by law. Yeah, because they follow the accounting standard and Companies Act. So nowadays, one of the very popular accounting standard is International Financial Reporting Standard, which is detailed here. International Accounting Standards and International Financial Reporting Standards are followed, so that the data which is displayed in the financial statement should be consistent. It should have minimum quality, and to ensure that minimum quality and disclosures, one need to follow the accounting standards and the company's law. So these are some of the basics of the financial accounts that we just discussed from the scenario. What happens, on the contrary, when management accounts are prepared? What is the management account? Okay, so imagine a situation. Again, when PepsiCo global team has given a mandate that, okay, Indian team need to ensure that we are selling 2 billion bottles every month. What will happen at the Indian board level or Indian CEO of PepsiCo? First of all, they will try to know where we are, how many bottles we are selling now versus how much we have to sell, and which are the states where the sale is less versus where we have more sales, where how many vendors and logistics partner we have as compared to the competitors. Can we attract those competitors, those logistic partners, so that they can sell our drink more in the market? What is required to attract those logistic support provider? How can we get more shelf into the retail stores so that our bottles and our products can be displayed, at the 4 to 6 feet height, so that more and more people can buy that? Those kind of data is needed, right? And it can be any other format of data the senior management of the PepsiCo can ask, because there is no legal format. There is no legal requirement to prepare or not to prepare this data. No, regulators don't care. Company registration office or legal authorities don't care whether you are preparing any management account or not, because it is just to run your own company more efficiently and more effectively, right? Again, a new CEO which came this month might ask entire information in a different format. They might not like PPT, so they will ask in Excel in a different format they will prescribe. So it can change time to time and based on the situation. So there's no prescribed format like a financial statement. And it can change based on the need. So yesterday they asked the requirement or the scope to sell Pepsi in every state. Next day they can ask for that, okay, how the Pepsi chips is being sold, because a new mandate from might be discussed in the board meeting this morning. So they will start asking for new piece of information. So it could be all ad hoc, need-based. These are the nature of the management accounts. These are the key words to understand the management accounts. It could be kind of very much variable. It can change every day. The format can change. The information requirement can change. The specifications can change, right? Or even maybe the reporting language can change, by the way. It could be Hindi or English, or it could be Spanish or French, based on who is asking what information. So it is completely ad hoc. It is need-based. It is to run the business. It is to run the organization. It is to reduce the cost, increase the revenue, change the target market, or change the advertisement strategy, it can vary. So that's the nature of management account. Not only that, it can also ask how is the staff attrition? Are we providing proper training to them? Is there any grievance? What is the attrition rate and what is the promotion rate? How much bonus are we giving? What is our staff salary as compared to the competitors? So how much PepsiCo is paying as compared to Coca-Cola? How many staff are promoted each year in terms of percentage in Coca-Cola versus PepsiCo? These aspects can be covered in management accounts. What are the different offices? Are they leased or bought? What are the incentive provided to our suppliers for the timely supply? And it can also provide the historical data plus the future estimates. So it's all need based. So that is the nature of management accounts, which is presented here in this table. So now we can see financial account versus management account. One is legally required, another one is not. Financial account is prescribed format, management account has not. Financial statement has a consistent rule-based approach. It has to have the bare minimum information. Management account has no such requirement. Financial account is presented on the historical basis. Management account can be historical as well as futuristic. Financial accounts talk about mostly money, return, asset, income, liability. Management account can have diverse need for the information. So massive difference between the two. So there is a quick question: which of the following statements about management account are true? There is a legal requirement to prepare management accounts. Format of management account is largely determined by law, and they serve as a future planning tool and are not used as a historical record. Okay, so first, there is a legal requirement to prepare management account. No, we just discussed. It is for the financial account only. Format of management account is largely determined by law. No, it can be changed anytime. Even the language of reporting can change whenever the management wants. So second is also incorrect. They serve as a future planning tool and are not used as a historical record. Yeah, they are used as a future planning tool, but they can be on the basis of historical records as well. So none of the statements are correct. Any question? Okay. So very quickly, the cost accounting and management accounting, some differences and definitions. Cost accounting is about analyzing the cost per unit or hourly basis, maybe wages, maybe relating to main, equipment, material, etc. So when we try to understand the basic input cost of anything, be it process, main, material, so that is cost accounting. It can reflect in our budgeting, in the estimate, because management required to really budget and estimate everything, not only to have the cash flow in the future, but also to decide the price, because most of the pricing is done on the cost plus certain percentage basis. If I make a mobile for 10,000 rupees, I'll try to have at least 20% premium. How can I decide the price if I don't know the cost? And the method to apply the cost to inventory, there are a complete different chapter for that. Absorption costing versus activity based costing, there are various costing methodology. But on the other hand, management account is concerned with kind of high level data, which is taking into account cost, budget, rupees, profit, sales price, the volume of sale, everything. So when we try to take the insight from financial account, when we try to take the insight from the cost accounts, budgets, and mix them together to formulate the data which provides the insight to the senior management to drive the business, to understand the business, to make the strategic plan, that becomes management accounting. So we can understand it is a critical It plays a critical role in any organization. It's a mix of varieties of information, but it provides ultimately the critical insight to the senior management or junior management for driving the entire organization. Okay. So it includes, what are the data that includes the cost accounts or costing, the future cost, the past cost, the value of inventories of goods. So when we talk about the cost, what is the cost of goods of sales, cost of the goods sold. So if I say that, okay, mobile was sold for 12,000, the cost was 10,000, we need to also then factor how we arrived at 10,000 worth of mobile, because there's no fixed way to calculate the worth of mobile. If somebody, factor the cost of expertise of even the CEO, then the cost of one mobile will be different. If someone say that, oh no, the cost of the CEO salary should not be factored, then the cost of mobile will go down. Someone will say that, you know what, the mobile component should include the cost of the raw material, which is now. One accountant can say, management accountant can say, no, no, you had some inventory which was bought 2 years ago, and the cost of each component was lower. So you should, calculate the cost on the basis of 2 years old stock, because you still have that 2 years old stocks in the storeroom. So that could be also a basis of calculating the cost. So the cost can also vary based on how you calculate this. So the value of inventories of goods, that is a complete different section to calculate the costing. Future cost is also calculated to make an estimate of that how prices should be, pricing should be done in the future. So that is the future costing. Then we also do the comparison. We have talked about the variance, or we often talk about variance in the news and in many forum. Variance means, I thought that to manufacture 100 mobile, I need only 1 crore rupees. But actually, it became 1.2 crore because of two reasons, or maybe there could be multiple reasons, but maybe two reasons. One, the inventories are more expensive than I thought, and couple of activities I did not account for. So that also increased the price. So surprise, surprise, there is a variance. Variance can be higher or the lower as well, but it can exist. So those kind of analytics is also done in the costing. How my actual cost compare with the budgeted or the estimated cost. And what is the information requirement of management for the costing. That will also go into this. So costing is a major area in management accounting, because if we know that cost, we can decide the price. We are almost in the world when the cost and price war never ends. It was there 100 years ago, and it is still there. We have seen in the network provider, data provisions, everywhere, cost and price is an issue. Everyone is trying to drive the cost down. Of course, there is some compromise on some time on the services, but cost always remain a big battleground. Whenever the economy goes bad, you might see that cost cutting becomes the first and sacrosanct religious activity. Everyone just try to focus on the cost when the economy is down. Anything happens anywhere, cost is the guy who is, called upon. Cost is very popular, even though we don't, it does not get that much flash and limelight in various business discussion, but is one of the most dominant tool. It can impact the profitability. It can impact the return on the capital employed, ROI, return on investment, right? All the different ratio that we will know, especially in the next paper called financial accounting. So all these return numbers are impacted by the cost. So it is one of the kind of I think little ignored guy, but very popular when the decision making is concerned. Cost accounting information and decision making. Cost accounting information is in general unsuitable for decision making because no decision is on paper directly made on the basis of cost. In fact, everyone pretends that they are not making the decision on the basis of cost, at least. So it is not considered suitable for decision making. Of course, it indirectly affects the decisions. Cost also. So here's another interesting statement. All decision making is concerned with the future, because we are planning always for the future. The mind always remains in the future. So there will be some degree of uncertainty surrounding the possible outcome of a decision. So since we are talking about, in most of the cases, future, whenever it comes about planning, whenever it comes about strategy, we talk about the future, and no one knows the future, right? So there is always an element of uncertainty. So because of the uncertainty, we talked about the variance earlier. Variance is there. Of course, there could be some error, some miscalculation, some misestimation as well, but it is very hard to calculate anything very precisely when it comes to future because of the uncertainty. Right? There is also a risk factor in any decisions. Maybe in one of the paper called financial management or even the financial accounting, we might discuss in more detail what is the difference between risk and uncertainty. Right? Those who are fond of mathematics or statistics will know better. So uncertainty is when you don't know what can go wrong at all. You don't know all the potential outcomes, then it is called uncertainty. But when you know what are the different adverse outcomes that is there, that is called risk. That is a very key significance between the risk and uncertainty. Okay. In risk, we know the outcomes. It is just that probability can differ case to case. But in uncertainty, we do not know even all the outcomes. So both kind of issues remains with the business when it comes to dealing with the future, risk as well as uncertainty. Okay. If we still have some calories left, we can do some question and answer. Let me remove it, make it one single page. Because with this, we will complete one entire chapter. That's a matter of great pride. Are you still able to see the page? And will not take more than 5 minutes. I can assure you. Define the terms data and information. I think by now we have done a little PhD on this, right? Data and information. What is the difference between the two? Every single login that you have on Facebook, every single thing that you have liked or shared, or the page you have viewed, that is data. But if I convert everything, trying to find out that, okay, you like one particular type of friends share, or you like the picture of one particular type of people or the tourist spot, then it is an information. Because then now I can target you for the right piece of information or right advertisement. If I can know what kind of advertisement to target you for, I can earn revenue. Because I can sell that information to the tourist company, and you can be targeted for the right tourist package. So that is information. When you try to derive right information, right useful insight from the data. Okay. 4 main qualities of good information. I had discussed that at the start of the class. Accuracy. Relevance. Yeah.
Timing. Volume.
Yeah. Completeness.
Yes.
Completeness
Confidence
is a key element. Yeah. Timeliness. Relevance. So these are some of the main qualities of good information. Communication, all this. Source. Third, in terms of management accounting, information is most likely to be used for
management.
Yeah, planning, control, right? So those three parts that we discussed between yesterday and today.
Bird's view.
Sorry?
Bird's view.
Yeah. Anyone else? So information has a very wide application. We are in the era of data and information age. Next, a strategy is the aim or goal of an organization. True or false? Sorry?
False.
Yeah, that's false. You know why?
How? You explained in the objectives of
Correct. Correct. So objective is the aim of an organization, right? Objective is the aim or goal of an organization. What is the strategy? Strategy is about how to achieve that goal. Is that clear?
Yes, yeah.
State the main objective of the following organization: profit making versus not for profit or not profit seeking. So profit making has one kind of top goal: to earn profit, to give the good return to its investor and shareholders. Non-profit making is to serve the society. That is their key goal. What are the three types of management activity identified by R.N. Anthony? So Anthony triangle, right? Strategic planning.
Strategic, tactical, and operational.
Excellent. So now we seem to be in tune with this chapter. A management control system is which one? A, B, C, D? Only one answer is correct.
C.
Correct. See, we are going good. So C is the answer for question number 7. 8. List 6 differences between financial and management accounts.
One is mandatory, one is not.
Right. Five more. Maybe everyone can try one at least. I will also give one. We'll achieve the goal faster. So another one is like legal, right? Financial account is legally required. It has a prescribed format, right? Anyone else?
One helps maintain historic picture there, and the other helps maintain historic record.
Yeah. Plus, financial is all about money. Management is about other aspect as well.
Strategic and organizing.
Strategy and organizing. And then management account has no, it's like ad hoc. It can have a different frequency. It can, change. It can be presented or not presented. It can have much wider, or internal users, because typically financial accounting users are external.
So what is the meaning of this word ad hoc? Like I've heard of.
Sorry?
Ad hoc. What is this ad hoc?
Ad hoc means need based.
Need based.
Right. So suppose that this is a class, right? And you know that okay, on regular frequency there will be class. And the alternative way could be I say okay, you can let me know whenever you have any question and we'll talk, right? So when it becomes need based, once in a while, whenever we feel like that, it is called ad hoc. It's like a Greek word, ADHOC, ad hoc. And finally,
Management accounting is presented to company's internal community,
right?
and financial accounting is prepared for external audience.
Exactly, yeah. So management is inward looking, financial account is outward looking. Right. Thanks, Nihar. So these are the 5-6 differences between the financial and management accounts. And finally, number 9, information provided by conventional cost account is ideal for decision making. True or false? Sorry, someone's mic is open.
False.
Right. Is everyone fine with that? Because information provided by conventional cost account is ideal for decision making. No, it is not used for decision making. It supports the decision making. What price you want to launch for, which market you want to go for, it cannot be decided just on the basis of cost accounts. Okay, so I think we are go to the chapter 1. Done with this.
So where could we get this book which you're teaching from?
You need to buy it from BPP.
Okay. It's another website.
Yeah,